Horizontal analysis of financial statements, a step-by-step introduction. Just like in the related video on vertical analysis, we are using an Excel file downloaded from the investor relations website of Meta Platforms/Facebook. Let's start with the horizontal analysis of the balance sheet. The way the balance sheet numbers are presented here is with the oldest year on the right and the latest year on the left. Horizontal analysis is used to evaluate the company's performance over time, spotting the direction of change in accounts balances and the magnitude in which that change has occurred. The standard comparison for the balance sheet is current year versus prior year. Let's calculate both the variance in dollars as well as the percentage change. In other words, V dollars and V percentage. The variance in dollars is simply the current year number minus the prior year number. For the cash and cash equivalents line, cell F9 equals C9 minus D9. The year-over-year change here is a decrease of $1.9 billion, hence the brackets to indicate the negative number. For the percentage change, there are two ways to build the formula. You can use the current year number minus the prior year number and divide the outcome of that by the prior year base. Cell G9 equals, open parentheses, C9 minus D9, close parentheses, divided by D9. Let's format this as a percentage with no decimal points. And let me display the formula for you using formula text. The second, much simpler way is take the variance in dollars that we already calculated in cell F9 and divide it by the prior year base number in D9. Same outcome, obviously. We can copy this all the way down for the various line items in assets. And then copy the formulas over to the liabilities and equity sections. In cell G31, an error message is shown as we are trying to divide by 0. Let's replace that by NMF, not meaningful. Now that the calculations are done, let's see what the numbers are trying to tell us in this horizontal analysis of the balance sheet. On the asset side, let's format the variance dollars and various percentage for current assets, non-current assets and total assets in bold. These are category totals, not line items. What we see doing our horizontal analysis is that total assets are up 12% or $20 billion. That doesn't mean that each and every line item is up 12%, as total non-current assets are up 27%, or $27 billion in absolute terms, while current assets are down 11%, or $7 billion. Current assets are cash and other assets that are expected to be converted to cash within a year. Non-current assets are longer-term investments that cannot be converted into cash quickly. Here's an example why I would urge you to always look at both absolute values as well as the percentage change. Other assets has gone up 139%, which is the highest percentage change of any of the asset line items. But in absolute terms, that's only $4 billion out of the $27 billion increase in non-current assets. And here's another one. Intangible assets are up 41%, the second largest percentage change in assets. But the absolute dollars impact of that is even smaller. An immaterial effect on the total. The real driver of the massive increase in non-current assets is property and equipment, an increase of 38% or $22 billion in absolute terms. Let's highlight that increase in property and equipment as the number one driver of the increase in assets. Then other assets as the number two, and the decrease in marketable securities of $5 billion as a partial offset. If I were asked to provide some narrative to the assets increase in this horizontal analysis of the balance sheet, I would add the following in cell H21. Major increase in P&E, $22 billion, an increase in other assets, $4 billion, partially offset by a decrease in marketable securities, $5 billion. Let's format that in italics, then right-click, Format Cells, Alignment, Wrap Text. We can put variance analysis commentary in cell H6 as the header for the column. In order to provide a narrative for each of the lines, a deeper dive into the variance drivers for each line is needed in the notes to the financial statements or the MD&A, Management Discussion and Analysis. Over to the liabilities and equity side of the balance sheet to continue our horizontal analysis. Let's format the variance dollars and variance percentage for current liabilities, non-current liabilities, total liabilities, equity, and total liabilities and equity in bold. Total liabilities and equity are up 12% or $20 billion, which is the same increase as total assets as the balance sheet needs to balance. Equity is up only 1%, while total liabilities are up 46%. Within liabilities, non-current liabilities have gone up much faster than current liabilities, 65% versus 28%. Let's follow a similar process for the horizontal analysis of liabilities and equity as we did on the asset side. Identify the top items in both absolute as well as relative terms that make up most of the impact. Let's highlight the $10 billion increase in long-term debt as the number one driver. The $5 billion increase in accrued expenses and other current liabilities as the number two, and the $3 billion increase in operating lease liabilities as number three. In cell H41, the narrative to add is introduction of long-term debt, $10 billion, an increase in accrued expenses, $5 billion, plus operating lease liabilities, $3 billion, drive growth. Let's format that in italics, then right-click, Format Cells, Alignment, Wrap Text. How about a horizontal analysis of the income statement as well? The standard comparison for the income statement in an annual report is for the past 3 years. We therefore have two comparisons to make in terms of the variance in dollars, as well as the percentage change. The way the income statement numbers are presented here is with the oldest year on the right and the latest year on the left. Column G will contain the V dollars 22 versus 21. Column H, the V dollars 21 versus 20. Let's underline and center the words and slim fit the column width. Column J will contain the V percentage 22 versus 21. Column K, the V percentage 21 versus 20. Let's underline and center the words and slim fit the column width. Cell G6 equals C6 minus D6. Cell H6 equals D6 minus E6. Cell J6 equals G6 divided by D6. The absolute change between the years divided by the prior year / base year. Let's format this as a percentage. Cell K6 equals H6 divided by E6. Now let's copy over the formulas to each of the rows below, and then format the relevant subtotal lines in bold or italic. Just like in the example of horizontal analysis of the balance sheet, there is a percentage in cell J15 that does not make a lot of sense. So let's put NMF for not meaningful in there. What are the numbers trying to tell us in this horizontal analysis of the income statement? Let's focus on the income from operations line and the line items leading up to it. An increase in income from operations of 43% in 2021 versus 2020. Revenue growth of 37% certainly explains a big part of that. And when total costs and expenses grow 34%, which is slower than the revenue growth, then operating income can grow faster than revenue. Of the four expense lines, both cost of revenue and research and development are at or near the average increase for total cost and expenses, which is 34%. However, marketing and sales expenses grew 21%, while general and administrative expenses grew 50%. With a spectacular revenue growth of 37%, you would kind of expect that to be the other way around. Normally, significant higher spending on marketing and sales explains at least part of the revenue growth. Something to investigate when diving deeper into the annual report. This is one of the cases where the horizontal analysis of the income statement provides you the hint of what to look at in more detail. If I were asked to provide some narrative to the operating income increase in this horizontal analysis of the income statement, I would add the following in cell C3. 21 versus 20. Spectacular revenue growth and some cost productivity drive very solid profitability growth. Horizontal analysis of 2022 versus 2021. A decrease in income from operations of 38%. Revenue slightly down by 1%, with total cost and expenses up 23%, leading to an $18 billion or 38% decrease in income from operations. It's very clear what the major cost category is that drove the cost increase. R&D, up 43%, or nearly $11 billion. A second factor driving the operating income decline is the 4% decrease in gross profit year over year. If revenue went down by 1%, but cost of revenue went up by 11%, then gross margin erosion occurs. Be careful with the color or the positive negative sign here. If R&D expenses go up, then income from operations goes down. If gross profit goes down, then income from operations goes down. If I were asked to provide some narrative to the operating income decline in this horizontal analysis of the income statement, I would add the following in cell C2. 22 versus 21. Major increase in R&D expense, $11 billion, and gross margin erosion on flat revenue drive profitability decline. To go one level deeper, add comments for each income statement line item in column L, after reading the notes to the financial statements and the MD&A. That's how horizontal analysis provides you both with preliminary big picture insights as well as excellent starting points to dive deeper into a company's income statement and balance sheet.